Hi, everyone. Thanks for joining us today. We're going to be talking about the best practices for subscription customer retention. My name is Nicholas DeGeese with FlexPay, and I'm joined today by both Robbie Kellman Baxter and Darryl Hicks, who I will be asking to introduce themselves individually. We're going to be going through a bit of a panel discussion today, and kicking it off, Robbie, would you like to take the opportunity to introduce yourself?
Sure, glad to. First of all, thanks for having me. My name, as you said, Robbie Kellman Baxter. I'm the author of The Membership Economy and also The Forever Transaction. I've been deep into the world of subscriptions and membership models for just over 20 years. I've worked with over 100 different companies. And I also have a podcast called Subscription Stories, where we tell true tales from the trenches. So very, very interested and excited about this conversation about retention.
Awesome. Thanks, Robbie. And Darryl, would you like to just introduce yourself as well?
Yeah, sure thing. Excited to be here and have this conversation with you, Robbie. But I'm Darryl Hicks, the CEO and founder at FlexPay, serial entrepreneur. Started out as a self-taught coder in cybersecurity, but got into e-commerce in a big way about 20 years ago. I've been co-founder and founder of multiple subscription businesses, but always really focused on the optimization and efficiency side of it, which led to the creation of FlexPay, which is an AI-driven tool that helps to reduce passive churn and recover failed payments.
Awesome. Thanks, Darryl. And my name is Nicholas DeGeese. I work with Darryl on the FlexPay team. I head up our customer success team, and I'm directly involved with all of our merchants on a day-to-day basis, understanding their specific needs and their specific challenges within this retention space. So the first thing I wanted to just bring to the table today and talk about was just the overall importance of customer retention across a subscription economy. And Robbie, as this is your main area of expertise, I'm sure you have some insights into why retention is so important for subscription companies.
Yeah, absolutely. If we were talking, 10 or even 5 years ago, I feel like I would have had to really push hard to get people to understand the value of retention. Back in those days, and Darryl, I'm sure you remember this. Everybody was all about acquisition, new logos, new customers, and quarterly revenue. Like all about what have you done for me lately? And really, the power of subscription is in the lifetime customer value. It's in that recurring revenue. So paying attention to retaining customers is of critical importance. I think today, most businesses that use subscription pricing understand that retention is something they should be tracking, and often they have a person with a title of retention manager. But I think there's so much nuance to how to really optimize retention that organizations are still just getting their arms around.
Absolutely.
Go ahead, Darryl, please.
Yeah, I just wanted to jump in on that and say that, we understand now better than ever before, acquisition is really just the first inning of the game. Retention wins the game, right? And you and I have talked about this before, like the cost of acquiring customers is getting higher and higher all the time. The cost of retaining customers, though, is much, much less. These are people that have already done the hard work of saying, yeah, like responding to your ads, engaging with you, pulling out a method of payment and saying, yes, I want to enter into a relationship with you, and to keep those people happy, motivated, and doing everything that we can to reduce any points of friction with them is really the key to building a successful world-class business.
So thank you guys both for that. And I know that I actually spoke a few months ago about customer retention on a separate webinar. And one of the main things that I talked about at that point was some of the tools and some of the practices that companies can use specifically to deal with really the non-voluntary customer churn. And that's really something I'd love to dig in a little bit today with both you, Robbie, and Darryl, about different types of ways companies can go about avoiding that non-voluntary churn. I know there's a lot of friction that can come from that, and I would love to see what your thoughts are on those specific, maybe some best practices of what we can do to avoid those. Darryl, do you want to kick off first from your perspective, and then we can have Robbie add some context as well from hers?
Yeah, I think there's just a tremendous amount of focus on active churn, right? Whenever we talk to business leaders, it seems like quite often the trap that they fall into is like, well, we need to have a better product, better engagement on our product. We need to have, we need to be focused on customer service, best practices, the way that we're interacting with people. And there's just not enough focus on passive churn. And that is the customers that you're losing for no other reason than there's a structural problem inside of the payments ecosystem that's preventing you from being able to transact with them. And if you really understand that there's a structural problem that exists inside of the payments ecosystem, then you can start to understand that really what you need is a new structural solution to that. You need tools. That's why there's this emerging category of, payment authorization management as a category of tools that exist to help to optimize the way that our payments run, to make sure that we're not accidentally running into problems of friction and things like that.
Yeah. I mean, it's interesting. I mean, first of all, let's just break it down for a minute. When you have churn, which is basically the opposite of retention, right? When people leave, sometimes they leave because they want to, right? They say, your product's not very good. Your product's too expensive. I've used up all your product. I'm not using the product as much as I had expected I was going to, or my situation has changed. I've moved away from the gym. Those are all active decisions made by the customer. Some of those active reasons that a customer might leave are fine. If I live 3,000 miles away from my gym, I should cancel my membership. The gym should actually cancel the membership for me because I'm not going to get any value. Those are the active reasons. I totally agree, Darryl, that a lot of organizations really focus on active churn. People who say, I don't want to do business with you anymore, and try to solve those problems one by one, which is a very good way to improve churn. But there's this other side, what you call passive churn, which is when, the summary of what that is when the customer didn't intend to leave. And something, as you said, something happened structurally that forced them out or forced them to recommit. So this is when, you send, your customer, your subscriber gets a message that says, payment not completed, please contact customer service. And so then the person's like, forget it. I'll just I just cancel. They weren't intending to cancel, but now that it's been canceled for them, they're like, okay, it's not worth it for me to call. And I think organizations under investigate this category. It can be, I don't know, I'm sure, Darryl, you probably have the numbers at your fingertips, but, it could be like as much as, let's say, 30% of the people that are leaving are because of one of these reasons. And some of them are leaving because they're fraudsters, right? They're using a bad credit card. They're trying to get something they're not entitled to. But some of them, it's a problem of the bank, or it's a problem of an API, or it's a problem that the merchant doesn't even understand because this isn't where they spend all of their time. And I think this is like low-hanging fruit, money on the table, because the customer didn't want to leave in the first place. And so I do think this is an area where I don't want to say most, many organizations under investigate what they can do, and they jump straight to, oh, people are leaving, we should lower our price, we should add another feature, we should call them, and in some cases, the reason is much more, as you said, structural and tactical. Just to fix the problem.
Yeah, and I'd love to jump in on that. You're right. We've spent a lot of time analyzing this and running a lot of surveys among merchants. Turns out that passive churn is the number one driver of all categories of churn. It makes up just over 40% of all churn in most subscription businesses in America. Over 80% of the passive churn is coming from these false declines. Yes, absolutely. We have bad customers. We have bad actors that are out there. They're not the majority of the passive churn that we have. Instead, it's a real problem of, today in 2022, if a cyber thief or a hacker has a database of stolen credit cards, they're not going to make physical cards and take them into Macy's, right? Ever since we get that little EMV chip on our cards, all of the fraud has shifted online. And so the banks have this real motivation, issuing banks, right? That's the name of the bank on the piece of plastic in your customer's wallet. Issuing banks are doing everything they can to keep fraud out of the ecosystem, but because it's an older legacy infrastructure inside of the payments processing system, they don't get the data that they need in order to make proper decisions, and they get it wrong a lot of the times. And so we're trying to remove a small amount of fraud out of the ecosystem, but we end up with a very large amount of false declines. The average in America right now is about 7 to 1. That means for every one actual fraudulent transaction, we're rejecting 7 kind of suspicious looking, but actually perfectly valid transactions. It's hundreds of billions of dollars. And I love what you touched on there really quickly, Robbie, and that the way that we handle this is so critically important because it's a very emotional thing. As human beings, if we get into the psychology of who we are, we want to feel worthy of our community. We want to feel worthy of our tribe. And when someone says, oh, you're not credit worthy, it almost feels like an accusation. And you're now forcing the customer.
It is an accusation. It doesn't feel like one because it is one. When somebody says your credit is bad, that is an accusation. How dare you? I have great credit.
Exactly. And it creates, whether people even realize it or not, it's this very emotional reaction, right? And it's like what you alluded to. You're forcing the customer at that point, if you choose to engage with them, right, over this, you're forcing them to make a choice. Do I want to continue to work with you? Yes or no? It creates this moment of truth that ideally you should want to avoid at all costs. And this is especially a problem for subscription companies that don't have a deep relationship with their customer, right? They face a much harder time with this, where now all of a sudden they're going to end up with this churn. So important as much as possible to use tools like invisible recovery. This is why this category of the payment authorization management has really started to emerge, because it turns out there's a bunch of tools that you can use and best practices that you can follow as a subscription business that help to solve some of the structural problems that are going on underneath and make it so you don't even need to engage your customer. Why put this problem on them? That's a terrible, terrible practice for organizations to take on.
So guys, this is clearly, there's clearly a big market here and a big issue here that we're talking about and trying to address. What can companies really do on a day-to-day or an overall process perspective to fix this issue? Where can a company go, and what processes can a company implement internally that they can fix this churn that you're seeing, either specifically in the passive churn? I know that there's active churn measures that we've talked about for many years, but from a passive churn perspective, what can a company do? Where can we go from this point to fix that problem? Robbie, do you want to kick us off first on this one?
Yeah, well, I sort of feel like the answer is FlexPay, given the venue and where we are. That seems like the punchline. But seriously, I think what's important for people to consider is, first of all, take a look at your own data and see what % of your churn is coming from a payment problem. And if you start there, then you need to think about a couple of things. Obviously, we're, this is, joking aside, this is what you guys do. And I do recommend that organizations look into, working with a payment recovery vendor, because this is a big deal. But even beyond that, I think that organizations need to think about how they communicate this. What's the language they use? How do they think about this, that they start to understand what are some of the drivers that might be going on, as you said, Darryl, 7 to 1. So for every person that's about to get one of these messages, right? For every person that's about to get one of these messages, there's a, let's say, whatever it is, 70% chance that they shouldn't have gotten this message. They should never have seen it. So if you have to put that message in front of them again, I mean, think of how you feel when you go through TSA at the airport, right? When they're checking to see if you have a bomb in your shoe and a bomb in your bag, and just keeping in mind that, it's not that we think that you're doing anything wrong. We're just checking everyone and trying to think about the language and to think about the long-term relationship, which I think, we started this conversation talking about the importance of lifetime customer value. That is, what's the amount of money that customer is going to spend with you or expected to spend with you over the duration of your relationship with them. And think about, how, do I want to be really conservative and risk losing them? Or do I want to be a little gentler, make a little more room to avoid so many, false positives?
Mm-hmm. Yeah. And I think I love the one thing that you said in there, Robbie, about how it really starts with taking the time to really know your own business and dig in deep. Take the time to do the analysis. So often I talk to, colleagues of mine, CEOs of different businesses, and I built up a reputation as being kind of the guy people talk to about churn. And I'd ask that question, and I'm sure you've had the exact same experience as me, Robbie. It's like, well, what are the different buckets of churn that you have inside of your business? Well, no, it's just all churn, and we need to solve this with a better customer service or better product and better engagement. And I'm like, well, have you taken a look? Have you taken the time to go through your credit card statements and looking through your billing system? Are you dispositioning all of these properly? Are you tracking the response codes?
What does dispositioning mean? What does dispositioning mean?
To tag the different transactions with a disposition, or to tag the customer events with a disposition, so that you're basically starting to bucket them up, right? It's like that old Peter Drucker quote, what gets measured gets done. Right. Yeah. And I think that it starts with measuring. That's why I love that was one of the first things that you said in your answer to Nick's question, is that if we don't measure this, if we don't quantify, if we don't actually really dial in and understand the true impact that, say, passive churn, failed payments is having in our business, it's really hard to decide whether, what to do about it. What's the right strategy? There are a lot of strategies out there, thankfully. Like, once we quantify how much of a problem this is for our business, then we can start to look for the right payment authorization management tool to come in. And then the other piece that you said, which I love too, is like, even the best payment authorization management tool or payment recovery tool is not going to get you 100% recovery on your failed payments. Therefore, there is always going to be a cohort of customers that you're going to need to interact with, because you can't afford to just let these customers out the door when it's passive churn. You've got to do something about it, right? But the way that you communicate with them, understanding that the vast majority of these people are actually perfectly creditworthy and didn't do anything wrong, or maybe they suffered with like a fraudster, like, hit their card. There's another transaction that got blocked, which caused now the next 5 or 6 or 7 transactions to fall into this sort of risky bucket and get blocked, right? Like to approach our customers with a little bit more empathy and a little bit more kindness and understanding, and be really careful in the language that we use, can go a long, long way. So I think there's a bunch of things in there to unpack, but starting first with whatever we can do, like, there's a reason why we went and got the trademark on invisible recovery, for example, right? Because we really believe passionately that when it comes to this passive churn, we should be using the invisible strategies first. Even if they're not going to get you to 100%, you do those ones first, and then you softly, carefully layer in your other points of interaction.
And when you talk about invisible recovery, what you're talking about is when a transaction doesn't go through, before you even say anything to the customer or change anything about the way you treat the customer, go figure out, is there a problem with the payment processor? Is there a problem because we batched all of our processing for the middle of the night, which raises a red flag at our bank? It's those kinds of things where it's like, even if you don't use a third-party vendor or partner, just thinking about, these are the kinds of things that could be driving this message before we just pass that message on to our customer. What can we do first? Which I think is really important. And I just want to make a point about, the whole magic of subscriptions is that you have a relationship with the customer, and the customer says, by subscribing to your service, I have confidence that you're going to continue to help me achieve my goal or solve my problem on an ongoing basis, and I don't have to worry about it. And so if that's what they're thinking, and then suddenly their payment gets blocked, they're going to say, looks like I have to worry about it. Looks like I need to reconsider that decision. And by the way, they're treating me badly right now, so I think I'm going to scoot and find something else. And there's I mean, right now, there is not a company, I'm just going to say this, so call me if I'm wrong, if you're the one company, but I don't think there's a company in the country, maybe in the world, that is not considering subscription if they don't already have it. So every competitor has it or is working on it. So in that environment, once you've done the hard work of winning someone over, you really want to learn from every mistake, from every customer that's churned, and make your system, that much better. And, breaking down the data and understanding what's driving it and picking the easiest ones first to fix is, the everyday work in the trenches of a subscription practitioner.
Yeah. There's a reason why so many businesses are moving to subscriptions. I mean, you and I, Robbie, were kind of early to subscriptions. We were talking about this before the recording started, of experiences that we had in trying to evangelize the power of subscriptions to people back in 2001. And it was like pulling teeth. Totally. But there's a real magic to a subscription when it's done right. The level of relationship that we've built, the depth of trust. But there is this factor of, like, what do they call it? Like, one of the wonders of the world, it's compound interest, this compounding ability. But once you understand the power of that compounding revenue inside of your business, you also have to remember, I love that quote from, I think it was Charlie Munger, who said that the first rule of compounding is never interrupt it unnecessarily. So once you understand the power of bringing subscription revenue into your business, you have to understand the very next thing you got to do. First thing is, like, how do I make sure that I'm not interrupting this, right? And this is why this topic is something that both you and I are so passionate about, is that if you're really going to unlock the true power of subscription, you've got to make sure that you have this outsized focus almost on all the things that can go wrong, especially, like you had said earlier, the low-hanging fruit of all this passive churn, where these people, they're not making a choice to leave you. It's just something's broken in the ecosystem.
Well, that's a lot of really good information. Thank you both for sharing that. We're running short on time for the webinar today, so I just wanted to ask: is there any closing comments or any closing information either of you would like to share with our audience today before I open it up to some questions that they may have for us? Robbie, would you like to go first?
Yeah, I mean, I think we covered a lot. Thing that I hope people take away is that beyond just saying we track retention, it's really important to get into the details of what is driving retention and what is driving non-retention or churn. And particularly if you notice that passive churn, that is churn that happened without the customer saying they wanted to leave, to really understand what's driving it and whether you can shore up some of those holes in that leaky bucket. As a way of, really delivering on the promise of subscriptions, which is about a forever transaction with your customers, that they're going to never want to leave because your service is so good. Don't force them to leave by, not accepting their payments because of something that they had nothing to do with.
Awesome. Yeah. Thank you for that, Robbie. Yeah, Darryl, go ahead.
Yeah, I was going to say, the other piece too, one of my favorite parts of this conversation that came out that I would really love the audience at home to take back with them is the importance of measuring, right? Be curious, dive into the data, take a look and try to really understand, making sure that you're bucketing things properly, putting them into the right categories. And then there's one other sort of, ninja move that goes even beyond that. For the companies that do track churn and the causes of churn, one of the traps that I've seen them fall into is that they just look at the churn as that one event, just that one transaction that failed. And what they forget to capture is the future lifetime value of subsequent billing cycles that were potentially lost because of that one negative event. This is why I love, thinking about subscriptions as kind of that compounding effect, that compounding interest. And of course, you don't know what the future revenue would have been because you lost the customer at that point. But we've been tracking with the customers that we work with, when we fix a given broken transaction and we're able to get that delinquent payment pushed through, especially with invisible recovery where there's no customer interaction required, depending on the merchant, we see over 80% of those transactions back the next month and the month after that. and the month after that. And so you can start to model out, even in an Excel spreadsheet, what's the true cost of not getting it right, of not having the right solution around this passive churn. And you can understand the exponential effect, like this exponential compounding effect cuts both ways. You can very easily end up in a downward spiral where everybody is competing to get subscription customers in. We really have dialed in what the future value is, and we're usually losing money for the first few months when we acquire a new subscription merchant. So the more revenue we can get out of this, the long tail of the customers that we've acquired in our subscription business, the more profitable we're going to get, and we're going to really enjoy that. But we have to make sure that we're factoring in the future cost of this one negative event, so that we can properly quantify, the pain and what's the ROI on a strategy we're going to put in place.
Awesome. Well, I appreciate the commentary and the feedback from both of you today. It's been very insightful, even for me, who's been doing this for a couple of years now. Again, thank you both. And we're going to be continuing to answer any questions that the audience may have in the chat box. So please feel free to continue asking any questions you might have. And if you wanted to reach out or contact anybody, I'm sure we'll be able to share that information with you in the chat as well. So again, thank you both for participating in this conversation today. It's been greatly appreciated. And on that note, it's been wonderful.
Thanks so much for having us.
It's great.